All right, everyone, I got the signal in the back that we are good to go. So, good morning. Okay, some people over here are having a good morning. I think the people on this side was on the BART train with me when they had police activity. So I'm going to turn my body a little bit and say, good morning. All right, love that, love that. So welcome everyone to Small Business Capital Access Summit. This is hosted by Renaissance Women's Business Center and San Francisco Small Business Development Center in partnership with the San Francisco Main Library. Before we begin, I'd like to acknowledge that we are gathered on the unceded ancestral homeland of the Ramaytush Ohlone, the original inhabitants and stewards of the San Francisco Peninsula. We honor their enduring connection to this land and pay our respects to their elders, past, present, and future. So let's just take a minute and just kind of a few seconds and breathe that in. Renaissance Entrepreneurship Center and the Women's Business Center have transformed lives and communities through entrepreneurship for over 40 years. Through no-cost training, one-on-one advising, and access to capital, their mission is to empower and build entrepreneurial capacity of Bay Area residents, strengthening communities through sustainable jobs, businesses, and job creation, and financial self-sufficiency. Small Business Development Center, also known as the SBDC, is a publicly funded program dedicated to helping small businesses start, grow, and succeed through expert guidance, education, and resources. They support entrepreneurs in building stronger economies, creating jobs, and making a positive impact in their communities. Thank you for being here today. We are excited to bring together small business owners, lenders, banks, CDFIs, and community partners for a morning focused on capital, connection, access, and opportunity. Today is about helping entrepreneurs find the right funding, meet the right people, and move their business forward. So can we give a round of applause for the day that is coming our way? I like you guys, you like follow on cue. So now as we jump into the program, so let me just kick this event off, everyone, and introduce myself. My name is Venice Johnson. I am an entrepreneur of 30 years, and I am a graduate of Renaissance Entrepreneurship Center. Should I add on that I'm an award-winning graduate of Renaissance Entrepreneurship Center. And this day and this opportunity is very special to me because I love small businesses and I love supporting small businesses. So I love also being the demonstration of the partnership that Renaissance is bringing here as well as the SBDC, and also demonstrate what it looks like, what it sounds like, what it feels like when you tap into these resources. So make sure before you leave today, make sure that you go out and visit the vendor's table when it's time to do that. But equally important, make sure that you're tapping these resources. They're in your backyard. Your tax dollars pay for some of them, and others, there's a low to no cost. So really tap into these resources and change your life, change the life of the communities around you, and create jobs for other people. All right, let's jump into it, everyone. So I'm going to invite up some individuals that are going to introduce themselves and have a 2 minute to just talk a little bit about who they are, as well as the organization that they are representing. So I want to start this off with Sharon Miller. She is the CEO of Renaissance Entrepreneurship Center. She'll be coming up, and then after Sharon will be Scott, and then after Scott will be Michael. So let's give a round of applause to Sharon, everybody.
Well, thank you, Venice, award-winning Renaissance graduate. And thank you all for being here. Thank you to the San Francisco Public Library, the SBDC, and a huge thanks to the Renaissance staff who, as you all know, putting on an event like this takes so much time and effort. You come in, it all looks seamless, but there's so much behind the scenes work. I'd like to thank each and every one of them. and especially Pavitra Balsubramanian, who has really led the effort on this. So thank you, Pavitra. And why are we here? We're here for the money. That's it. You know, Renaissance has been doing entrepreneurship training, support service, and access to capital for over 40 years, and we do it because it works. We are about the money, and that's about helping small business owners to build wealth, to achieve their potentials, to create better futures for themselves and their families. Small businesses, all of you here today, are bringing new products and services to the market. You're delivering things in a different way. You're changing the way business works, and you're bringing so much value to your families, yourselves, your employees, and our communities. We all know small businesses are the social fabric of our communities, and they are creating great opportunities. So while you're here today, we're really focused on helping you to access capital. You're going to meet with lenders. You're going to meet both banks and CDFIs. And you're going to have opportunities to look at how you can reach out and engage with Renaissance and the SBDC on building your capacities, getting loan ready, knowing what to do once you get that capital to make sure it's got its best use, and explore your business ideas. So whatever stage of your business you're at, we are here to help you. So thank you so much. I wish you all the best on your business journeys, and I really hope that Renaissance and the SBDC can be part of them. Thank you very much.
Thank you, Sharon, for that inspiration and motivational message. So now I'm going to invite Scott Rogalowski up, the Deputy Director of NorCal Small Business Development Center.
Good morning. How's everybody doing? Awesome. Scott Rogalowski here from NorCal SBDC. We're very excited to be here today. We have our local center. We have Pavitra and Shala here that are helping from the San Francisco SBDC. For those businesses that are here from San Francisco, we have representatives that can help you, advisors, whatever stage of business that you're in, whether you're starting or you're growing your business. How many of you are starting? Awesome. And then how many of you are existing businesses? Cool. And how many of you need money? Awesome. You're in the right place. So we do have money here. I think the banks brought it, and depending on the qualifications and all that good stuff. So at the SBDC, we're not a direct lender. We work with you to help find the right lenders. So if you are listening to all the lenders today, banks, credit unions, and you're thinking, which is the right funding for me? We can help you with that at no cost, help you put together your finances, your projections, your business plan, and help you get the right capital that's great for your business at the stage that you are in. NorCal SBDC, we cover the most 36 northern counties of the state. So if you're outside of San Francisco, myself or my colleague Alan can help you get the assistance that you need at no cost. We don't charge anything. It's 100% your tax dollars at work. So thank you very much for being here, and have a great event.
Thank you, Scott, for that message. And now I'd like to invite, I'm going to just kind of scroll back a little bit. I am inviting up Michael Lambert, the city librarian for the San Francisco Public Library.
Good morning. Thank you, Venice. It is so wonderful to be here for this Small Business Capital Access Forum. Here's a fun fact about me. When I was a young man in Columbia, South Carolina, where I grew up, I started as a business major, and I thought I was going to be an entrepreneur. I used to do building maintenance for my hometown public library. I was changing light bulbs, schlepping furniture, and light plumbing, light electrical. And so I'm incorporated by the Secretary of State in the state of South Carolina. My business the name of it was Lambert's Lighting. And I was going to start a business to change light bulbs on the interstate highway system in South Carolina. It's actually pretty lucrative. But I was 21 years old, and I lacked the capital. And I bid on two state contracts, and I needed both of them. I only got one of them. And so my career did not go in that direction ultimately, but I have always kept an entrepreneurial mindset in my approach to public service. And it's really fitting our mayor, Daniel Lurie, he has reorganized government, and the public library, you may not know this, but we are part of the housing and economic development focus area of municipal government. And it may not be intuitive on first blush, but what does our public library do? What do we represent in our community? Well, first off, we do have the best public library in the whole country, hands down, the mighty SFPL. So our vision is a democratic, equitable, and vibrant San Francisco for everyone, where our residents are thriving and our library staff helps all of you to live your best lives. And part of that is being a thoughtful navigator, helping get our community connected to the resources and services they need to be successful. So as it relates to entrepreneurs, we have a small business center here at the main library. So if you don't have a library card, I want you to get one on the way out. We have some incredible designs. We got a new Bruce Lee library card. We got a Star Trek library card. But I want this public library to be your secret weapon, because whether you're doing industry research, sales prospecting, our team is here to help you and get you pointed in the right direction. So just keep that in mind. I hope you have a wonderful day. I hope you find some financing and capital, whatever you need to be successful, and congratulations on being here today. Thank you.
So I want to echo a couple of things before we go back and look at the agenda for the day. So Michael doesn't know this about me, but I'm going to share this. When I first started my business, the San Francisco Library was the place that I came all the time. I remember going up to the business floor. Anybody been up to the floor where it's all businesses? I just wanted to move in, because I literally was there like every weekend, and my son was little at the time, so I would pack all of his snacks and what have you, and I live in the East Bay, so we'd take the train over, and then we'd stop I would go to the business floor first, and I would get all the books and things that I thought I needed. Then I would take them down to the kids section. And then my son would sit there and he would watch videos and all the kind of stuff, and they would have story time. So I would make sure that I planned my time around him being able to be educated and engaged, while we're at the library. And so that's how I really started my research. This was back in the day when they had microfiche. Some of y'all don't know what that is. Some of y'all who do know are thinking she's a dinosaur like me. I accept that. But the San Francisco Library has been very instrumental in me growing my business. It's also been instrumental in just me tapping into other areas in my life. So I definitely encourage you all to get a library card. It's our tax dollars. So get a library card and use the resources that Michael talked about, but also the other ones that have just stepped up. So I'm going to take a step back. This is our agenda for the day. So if you want to take you have your programs, but anybody that wants a quick reference, just take a screenshot of it on your phone if you like, so that way you just know what the agenda is for today. All right, so now I get the honor and the pleasure of introducing and inviting up our keynote. Emily Bermejo, the Director of the California Office of the Small Business Advocate. So please welcome Director Emily Bermejo, the 6th Director of the California Office of the Small Business Advocate. Director Bermejo has served in leadership roles across the U.S. Small Business Administration, the Governor's Office, the Department of Labor, and California state agencies, with a career dedicated to expanding access to opportunity and strengthening support systems for small businesses. Please put your hands together for Director Elmi Bermejo.
Thank you so much.
You're welcome. You're so welcome.
Thank you very much for that wonderful introduction. It's great to be here this morning, and it's great to see so many people who registered to come to this event to learn about capital and growing your business. And just want to take a few minutes to talk a little bit about the work of Cal OSBA. So Cal OSBA, the California Office of the Small Business Advocate, is under the governor's economic development umbrella. So that means we have the Film Commission. We also have an office of CalBiz. So if you want to do business in California, what permits are you going to need? How do you find a place for your business? So we have amazing resources. You want to do international, some people over here might decide pretty soon you want to do international trade. We have folks that can help you with that. And we're very unique, I think, in that we're not just centered in Sacramento. We have folks all over the state of California, and one of those people that I get to work with is Jermaine from Jermaine Carter Gibson. He is part of our Northern California team, and he's out there meeting in different communities. So it's not as if you think, oh, I have to do, it's just Sacramento centered. I also want to thank Sherry Miller and the Renaissance Entrepreneurship Center for the invitation to be here today. These kind of gatherings are very, very important because it brings us together and we network with people because we don't know what we don't know. And we sometimes think we're alone in this journey, and we're not. There are resources, there are partners, and there are so many things that you can access to grow your small business. Also want to thank Michael Lambert from the Public Library for opening this space. I had no idea they do so many amazing things. I haven't been here in a couple of years. We even did a public hearing. I serve on the Commission on the Environment for the City and County of San Francisco, and we did one of the first ever joint commission meetings, and it was hosted here. And it was with the Commission on the Status of Women and the Department on the Environment to look at, how environment impacts women and girls. So this is a wonderful convening space. It's so welcoming. And again, I'm going to make sure that I get my library card. But I also want to take a moment before I launch into this because small business, my family has a small business, and it's called Tommy's Mexican Restaurant, and we have access to pretty good tequila. No. Yes, that makes me very popular. In fact, my sister and my nephew are here. But my dad opened it in 1965, so that's 60 years. And when he opened the restaurant, people came by and said, restaurants really don't do very well, and so you're probably not going to be in business very long. And he said what they didn't know is that I had planned to outwork everybody. And I think in a small business, there is no such thing as that is not my job. Because trust me, on weekends, you could see me at Tommy's cleaning tables. In one part, I honor my dad's memory doing that because he loved the restaurant. So every night when we leave Tommy's, we always say, "Good night, jefe." And my mom will usually say, "Buenas noches, Tom," to my dad. And so we honor his legacy. And it's a really family-run restaurant, but also a lot of struggles that you all are very familiar with. And that's what we're here to talk about today. Because while Tommy's has been in business for 60 years, and we see the challenges going up and down, going out of COVID, and all these other things, capital access means for small business a lot. So making sure that you connect with folks today is very, very important. And I was telling you about Tommy's because it's not an abstract thing for me. It's not like something that, oh yeah, I know about small businesses who might be having challenges. I've seen it with my own family, and I know what it means to navigate the difference between a dream and a reality. And that is sort of my why. And that is a big part of why I'm here today. So I also want to talk about the state of business here in the Bay Area, and let's focus on the San Francisco, Oakland, Fremont metro area, which is home to nearly 536,000 small businesses. They represent 99.4% of all businesses in this region and employ 1.1 million people. Nearly half of this metro area's entire workforce works for a small business. And between 2012 and 2020, before the pandemic, small business employment here grew from 945,000 to 1.1 million. That growth doesn't happen by accident. And San Francisco specifically has roughly 90,000 businesses with fewer than 100 employees. 78% employ 0 to 4 people. These are founder-led, neighborhood-rooted businesses. Every month, there are about 125 restaurants and bars, 75 new retail locations, and 30 new service providers in this city. The entrepreneurial spirit here is undeniable, even in the face of everything the city has been through. San Francisco, as you know from the 1906 earthquake, we rise from the ashes and we do things better. And the diversity of this business community is one of its great strengths. Women own 44% of small businesses in this metro area. There are approximately 160,202 Asian-owned businesses and 78,287 Hispanic-owned businesses in the Bay Area. Statewide, about 40% of California's small businesses are owned by immigrants. This city, this region, this state, the small business community here reflects who we actually are. But success and opportunity here are not without challenges. Downtown recovery is happening, but it is uneven. There are over 300 empty storefronts downtown as recently as last year. Retail vacancy has improved to 6.0% as of Q1 in 2026, but some corridors are still struggling. And in some of the neighborhoods, out in the Gary area, people go, why are you closed so early? Because people are eating earlier. They're also sharing food that wasn't happening before. And most people are home by 9 o'clock. And so you have to also adjust your hours to when customers are there because of the high cost of employment or hiring folks and all these other things that we know small businesses are challenged by. But even as new programs work to bring businesses back, the entrepreneurs who want to fill those spaces often run into the same wall, access to capital. And we've seen that with SBA changing its loan practices. And we have somebody here from David Incapia from small business, where I used to work before. And so firms with 1 to 4 employees were turned down 5 times, probably 5 times the rate of larger firms when you're going after small business loans. And business owners, white business owners, were fully approved for loans at 35% compared to 19% for Hispanic business owners and 16% for Black owners. The gap is not a coincidence. It is a gap the people in this room and the people on my team, like Jermaine, are lending in about. We're trying to improve that. We're going out there to talk to people about small businesses. Don't leave money on the table. Make sure you're making those connections while attending forums like today. Now, the Federal Reserve, and we have somebody from the Federal Reserve, most recent small business credit survey found that applicants at small banks were fully approved at a rate of 57%. That's higher than any other lender type, and that 59% of Western District firms applied for some type of financing, most often to cover operating expenses. In California, we've been working to expand further through our SSBCI, the State Small Business Credit Initiative, so make sure you see that. SSBCI is not just another acronym that you need to know, but because it's something that's already in place with our partner lenders without you having to ask or apply for anything else. What SSBCI does is to enable lenders to participate in government-backed loan programs, reach borrowers they might otherwise have passed on, and offer better terms. So all of you have to do is just for your capital needs and work with one of our partners and be connected to these. And we are still getting money from the federal government for some of these. We have really good relationships with the Department of the Treasury. We've been very lucky that they continue to fund us, and we hope that is going to continue. And of course, we also have our SCALE network. And SCALE, like all state programs or government programs, is not just an acronym. It stands for Success, Capital Access, and Leadership for Entrepreneurs. So SCALE, I like to also call it SCALE California because it's a network of over 300 organizations that are there to help you with your small business, to help you with your business plan, to advise you. And the idea is that you are not alone as a small business person. So our Scale Network is something, we do a lot of events with them, and when you're ready to start to grow, and even when you are ready to look at succession planning and exit, Scale is there to support you. California, Scale, we have connected small businesses to $3.1 billion in lending capital and $4.1 billion in equity. So remember that, Scale, success, capital access, and leadership for entrepreneurs. We also want to mention state contracts. Some of you are growing your business, and remember the state, through our procurement office, we have a really good program with an individual in our office at Cal OSBA who works with all of the representatives with all the state agencies who do procurement. So we have relationships with Caltrans, the correctional facility, GSA, so that when you're ready to figure out what it is you need to do business with the state, there are people who can guide you through that process as well. And of course, over here in San Francisco, I want to also make sure that I thank again the Renaissance Entrepreneurship Center, SBDC, San Francisco Public Library, because we have a lot of different programs. I want you to make sure that you also remember to sign up for our newsletter. And it's calosba.ca.gov. We have all our programs are listed there, our Scale Network in California, and also any upcoming events. So there are connections there, and also the newsletter that comes out tries to have information that is current, so you can be up to date on all these things that are happening at the state level, the federal level, and regionally. So I just want to say thank you for the opportunity to be here today. You know, I know how hard it is, as I said, to run a small business, to start, to make sure that you have the tools that you need. And these are very uncertain times. So just know that you're not alone. And we have a whole team of people to help you, the people here, Sharon, Scott, these convening spaces. I had no idea that the public library, you could come here and, as Venice said, and make sure that you have the resources to do that. It's an honor to be here with all of you today. And I know that we'll continue to work with one another and make sure that you connect with people, because that's very important. Make sure you get their business cards. Make sure you follow up. And if you don't, you're not alone in asking questions either. And so with that, thank you very much, and enjoy the day, and make sure you make all those connections to not only start, to grow, and to succeed in your small business. Thank you.
That was powerful information. I'm going to have a quiz in a minute for all the data. But in the meantime, in your free time, I definitely encourage you to research the stats about small businesses. And a couple things I took away from Elmi Bermejo, thank you so much, Director, for your time and your wisdom. But I texted myself a phrase, and I want you all to remember this. So, small business is who we are. Small business is who we are. So as the day progresses, I want you to hashtag, connect with Ren Center on IG, post that on LinkedIn, take pictures of yourself and post that, and hashtag small business is who we are. So just want to encourage you for that. Now we're going to move on with our program, and we are going to now have our first panel. So I am going to invite the panelists up and then the moderator and turn it over for a powerful conversation. This panel will explore what's shaping the small business lending landscape today, from interest rates and shifting lender expectations to the evolving mix of funding options available to entrepreneurs. Panelists will share insights on where business owners are successfully accessing capital, how lenders and investors are adapting their approaches, and what opportunities and challenges are emerging for small businesses looking to grow. Let's welcome up our first panel guest, Andrew Crone, Senior VP of Sales, Marble Bridge Funding Group. Next, we're going to invite up Rodney Fong, President and CEO of San Francisco Chamber of Commerce. And then we have Sarah Sims, Community Development Finance Manager, Community Engagement and Analyst, Federal Reserve Bank of San Francisco. And last and certainly not least, we have Emily Gassner, Chief Program Officer of Cameo. And our panel will be moderated by David Hincapi, Lender Relations Specialist, SBA.
Good morning. All right, turn off your Telemundo and Fox Sports. It's Norway and Ivory Coast are still 0-0. They just did the water break. Boo. Welcome, everyone. I'm just going to be the guy who asks the questions, which I have here. I don't have a lot to add to what everybody else has said. I started working with small businesses in 2013. So after 13 years of this work, what I've learned is the fundamentals, the fundamentals, the fundamentals, the fundamentals. And I think the panelists will agree with me when we get into this. And since we're here talking about capital, the capital fundamentals are understanding financials and understanding your credit and understanding how all of that relates to how you get money. At the end, I'll have a little anecdote for you about why there's no magic formula, there's no special secret. Don't believe anything you see on Instagram, Facebook, TikTok, whatever. There's no hack, there's no key, there's no nothing. There's just the fundamentals. So, let's get into it here. And I'd like to begin at the far end. From your perspective, what is the current state of small business financing in 2026? And say a little bit about, just begin with that. Let's begin with that.
Sure, and as just a way to share a little bit about myself and my background, I've been involved in either small business lending, micro lending, all things small business for the past 25 years. At Cameo, I actually work with mission-based lenders, small business lenders and micro lenders, both in San Francisco, California, and around the country. And so the comments that I have will be related to that type of perspective. And I started and ran for 20 years Working Solutions, CDFI, who is here today. I saw Titi Akile is going to be on a panel later today. And so kind of that's what I'm thinking about when I think about this question. And so from my perspective, in the types of mission-based lenders who are making loans up to $50,000 micro loans or up to $350,000 small business loans, is we are still seeing demand from small businesses and a huge interest in growing the number of loans that these small business lenders are making. So they're trying to figure out, do they need to create new products to be able to meet the needs and the gaps? And they are really focused on getting capital to those who need it most, those who are under-resourced in low-income communities, and those who have been turned away from traditional sources for lending. So I'm still seeing very strong interest and both growth in lending from these types of community organizations. They're providing flexible, affordable capital. One of the things that has changed is their own access to capital. So during the pandemic, there was a lot of flowing capital to these organizations to then get out to the small businesses. And it was grant money, it was very low cost capital. And that was getting sent out, and we had all the grant programs and 0% loan programs and all of those kind of things during the pandemic. And what's shifted now is that those types of dollars have, for the most part, completely gone away. And so what we're looking at is these business lenders, they borrow themselves and lend it back out. So I'll talk about interest rates a little bit later, but we're seeing less in the grant side, fewer, if any, grants opportunities, and definitely more just lending at the normal rates and the interest rates that they have based on the capital that they have.
Andrew, same question. Since you're from a funding group, what do you see?
All right, let's see.
Current state of small business financing, that is.
So before I get into that, I also want to do a quick introduction. I'm Andrew Crone. I'm Senior VP, Marble Bridge Funding Group. We're located in Walnut Creek, California. I've been there over 28 years. I've been working with the SBDC for all 28 years. Great organization. I also want to thank Renaissance and the San Francisco Library for hosting this event. And I've been doing these events that long. And that question's come up a lot of times over my career. And in the sense that we are a lender doing asset-based lending, our niche is doing receivable finance. So if you're a business doing business with another business or government entity, we're the type of lender you might want to talk to and explore if the banking model doesn't quite fit with you. I also work with the CDFIs who are here today that you're going to have a chance to meet. And you'll get to talk to all of us when this is all done. And you want to come around and meet all of us. Because sometimes you can get money from more than one lender, me and a CDFI. You want to learn about that. Now, going into today's business, where we are today, it's probably tougher than it's been in quite a long time. And I could state that by the amount of clients that we touch base with every month. On average, we get 100 referrals from SBDC, from banks who can't help the clients, from all over the community. And the problem with a lot of these businesses, and I'm going to bring it up, the term MCA. Many of you may not know that term. It's merchant cash advance, or you can call it payday loans. You hear their ads on the radio all the time. You hear it on the internet. If you're a small business, they may be calling you every day, every week. Their reach is incredible. They have billions of dollars of private equity coming to get you. And the loans are easy. 48 hours, you have $100,000 in the bank. And you're paying 40%, 80%, 200%. I've even seen 400% interest. You take those loans, it's almost impossible to pay them off. Then you renew them again. And pretty soon, you don't have a salary. You're working for them, and you're trying to keep your business alive, and you can get multiple loans and bury yourselves. I talked to a business yesterday with 4 of those loans. 4. And he pledged the same assets to each one of them. They don't care. He needs money. I can't take him out. There's not enough receivables for me to fund to take him out. I even looked at it with a CDFI combination. Not enough. He's going to have to raise private equity, give up equity in his business. So in the marketplace today, you're going to see those loans. Talk to SBDC. Talk to the business consultants. Talk to me. Talk to the CDFIs. Don't talk to these guys. They're not here to help you. They're here to bury your business. And that has become probably the biggest nightmare that is happening. Even the state of California now requires disclosure documents that they show you the interest rates. And I've seen those docs, and people are still signing them. And they just don't know that there are other areas to go to. You're at a great event today. We all have a huge amount of knowledge about where the money is, what you have to do to run your business. All of us are here to help you succeed. And that is probably the biggest issue today. The second one, just real briefly, is inflation. Anyone have a Caesar salad for $6 recently? No. $18? Yes. So, inflation is with us. It's going to be with us for several more years. No doubt about it. You have to be able to look at your business and figure out how you're going to raise your prices. You cannot make 10% to the bottom line and give up 3% 3 years in a row. You'll be out of business. So that is another challenge for all of us, is to get efficient with your business. SBDC can help. They can look at how you're modeling, how you're running your overhead. You're going to have to get smarter. AI may help some of you along those lines, but that's also another challenge facing small business today.
The thing he said right there about the 10%, the 3%, any of you future business owners or current business owners, if you got lost when he brought up those numbers, if you were a little confused, that's the thing you didn't know. That's the thing that the SBDC and the Women's Business Center is going to help you. If you were lost, and I know some of you were, that's what you go there for. To go, wait, I don't understand. Why can't I pay 10% when I'm 3%? If you don't know what that means, that's why you go to these resources. Same question, current state of small business financing, which from your perspective as the president and CEO of a pretty large chamber of commerce.
Thank you, David.
What do you see?
What's the score now? Is there any update?
What's that?
What's the score
no,
now?
I'm looking
Okay,
at I got my
alright,
notes.
alright.
I know you all think I'm watching the game. I'm not. I'm not.
Thank you. Hey, hello everybody, and this is great that we're having this convening thanks to Renaissance. This is exactly the kind of resource sharing that I think needs to happen on a constant basis. As your business, either you're starting it up or you're growing or you're a 50-year-old business, there's still a constant need to be informed, to have access to capital in so many different ways. Really quickly, the Chamber of Commerce has been around for 175 years. People think it's the big chamber, we've got big businesses only. That's not true. 62% of our members are small businesses. So we make sure that everybody's being represented. And we see the city of San Francisco's business community as an ecosystem where we all need to feed off of each other. We don't survive just as small businesses. We don't survive just as large businesses. So that's where the Chamber of Commerce would love to continue to help offer resources. Many of our members, financial institutions, consultants, experts, want to share their knowledge, their years and decades of knowledge with everybody. Personally, our family ran the Wax Museum at Fisherman's Wharf for 50 years, so grew up in a small business, and so know firsthand it is hard work, maybe the toughest job. You're the marketing person, you're the accountant, you're the HR, you're everything, and so that is incredibly demanding. I think where people begin to make mistakes is taking a look away from the fundamentals, and when we're talking about access to capital, we're ultimately talking about the valuation of your business. Do you have contracts that are leading months out, years out, that when you go to a bank to seek any kind of loan or request, that they see, hey, this is a viable business and there's receivables coming in and that this person is watching their expenses. I'll sort of just leave it, you guys all know the late Charles Fan Slanted Door. We were pretty good friends and playing golf and talking about the restaurant business, and he told me, hey, Rodney, every business succeeds or fails before they open, and it's largely based on the lease negotiations and the terms that you maybe are set to pay. And so in his mind, line all those things up, do all your homework on insurance, lease negotiations, cost, TI expenses, all of that math is going to determine largely the success of your business. It's tough because many of us as entrepreneurs are dreamers. We're optimists. We have an idea and we want to try to bring it out to the public because we like it. We think they're going to like it. But I think it's important to have a pretty solid fundamental background. Or if you're not good at that, just to admit that and find a partner, find a resource that can help you on that side.
Quiz about those lease negotiations. Where do you think you can go get help if you've never done one? Where else? Very good. Okay. Best for last regarding the current condition, because the Fed has all the money. The Fed has all the money.
Yes.
But please say something about the Small Business Credit Survey and just what do you see as, business financing in 2026? Please tell us about that.
Thank you, David. Hi, everyone. I need to start with a quick disclaimer that the views expressed are my own and do not represent those of the Federal Reserve Bank of San Francisco or the Federal Reserve System. Some of you have probably heard that disclaimer before. And I just want to ground my comments quickly in sort of the perspective that I'm speaking from. So the Federal Reserve works to ensure that we have an economy that works for everybody. And all of us in this room know that a thriving small business sector is critical to economic health. So we at the Fed want to understand, how are small businesses doing? Are they able to access the credit they need to grow and hire and thrive? And one of the ways that we do that is through this survey that David mentioned, and you heard mentioned during the keynote too. It's the Small Business Credit Survey. It's an annual survey that the Fed conducts nationally since 2016 of small business owners, both employer and non-employer firms. And we ask them, how are you doing? Where are you going for credit? What's your experience? What do you need? Where are the gaps? And so these data are what I'm going to sort of use to ground the conversation, and it's really just all of the things you've been hearing from the speakers so far, anecdotally, we are seeing in the data. So one trend I'd point out is that we are seeing that demand for financing is back to where it was pre-pandemic. So during the pandemic, we saw a big drop-off in the demand for traditional capital because, as Emily mentioned, there was PPP, there was EIDL, there was all of these resources for small businesses, so they didn't need traditional capital. That has slowly come back up, and so the demand is back to where it was pre-pandemic. When you look at the approval side, we are seeing some differences. So prior to the pandemic, we asked businesses, if you went for financing, were you approved, partially approved, or not approved? And what the data show are that 52% of businesses that sought a loan, line of credit, or some type of cash advance product in the prior year were fully approved for that financing. If you go back to pre-pandemic, that was 62%. So what that tells us is that there is a gap. There are the approval rates are lower, and so we know that there are some businesses that they're seeking financing that are not able to get it. So I have more data to share, but I'll save that for the.
Thank you. So a major topic, especially for first-time borrowers, one of the big questions is interest rates. So I want to pose this to everyone and let you jump in this time instead of me choosing. Regarding interest rates, are they, well, talk to me about interest rates, right? How are the economic conditions influencing lending decisions and borrower behavior? But how important are interest rates? Is there anything else that's important when you go seek credit? So jump in, whoever wants to go first.
Sure, I'm happy to. So with CDFIs, which are Community Development Financial Institutions, which is a fancy name for just a small business lender that happens to usually be a nonprofit organization, there are influences affecting them that you might see interest, kind of the offerings for interest rates going up. They're trying to keep the interest rates as affordable as possible to you, the business owner, but their cost of capital has definitely gone up. They borrow funds, and those are borrowing at a higher interest rate, much higher interest rate, and growing interest rate, and or harder to find those funds to then lend it out to you. So, so you might see some interest rates kind of creeping up that bit by bit over time. We are hearing that small businesses are pickier in terms of what they're looking for when they go. They have access to so much more knowledge now. So asking about the interest rate is one of them, but it's not always the most important thing. One of the things that you can do as a small business owner is when you're talking to a lender and you find out the interest rate, depending on the length, which is the term of your loan, and the interest rate, if you can ask the lender for what's called an amortization schedule, or showing you how much every month you'd be paying in interest. And depending, you might not actually see that much more payment and interest depending on the interest rate. So I oftentimes would hear of small businesses that they're always just going for the lowest possible interest rate, and it doesn't make that big of a change in how much they're paying for the interest. It just depends on the dollar amount you're asking for and the number of years over which it occurs. What you really want to be looking for is this lender a fit for me? Can I get what I need? Am I getting value for them? Are they helping connect me to other businesses? Are they helping me with things like financial management, my marketing, maybe tools for AI, things like that? And also, what are they charging me in any upfront costs? So is there is there an application fee, an origination fee? What are those kinds of things? Because you should take those all into account. But also, are they people that I want to work with over the next couple years? What is the relationship like? Can you call them when you're having a challenge and they can help you or send you in the right direction? So the relationship is very, very key, because they can also help you as you grow with a larger loan, or referring you to someone who might be able to help you with that, referring you to someone who can help you buy your building if you're kind of in a brick and mortar and want to do that over time. So the relationship is really key, and figuring out, is this the right type of lender to be able to work with you? Are they transparent? Are they sharing what the interest rates are, what the APR is, like all the fees? It shouldn't be a mystery, and you shouldn't find out after you've signed something. They should also be walking you through the documents and explaining what all the legal terms are in the documents, so you're not just signing something that you don't know what it is. They also should be able to help you, whether you're someone who's great on your phone and computer doing all your application online. They should be able to also help you if you can come in person or meet someone in person that can really sit down with you and walk you through and tell you why they're asking for specific things. Because at the end of the day, every lender is looking to see, do you have enough cash, excess cash, that you're going to be putting out from your business to be able to pay at least $1 or $1.25 for every dollar that you're borrowing. So.
That idea, by the way, is debt service coverage. If you don't know what it means, go to your advisor at the SBDC or WBC, if that's new to you. Andrew, please talk to us about interest rates, borrower behavior, lending.
So within a CDFI SBA loan, getting a term loan at a particular rate, paid back over so many years, part of your business model needs to be, is that going to be enough money to get you where you're going? If you're $1 million business and you're going to $2 million or $3 million the next year, it may or may not fit the model, and the CDFI can tell you so. I had a real life example of a $1 million janitorial business down in LA that got a COVID cleaning contract for the LA school district, $50 million. He got a loan from us. No other lender could fit the model. He was able to do that contract, made him a millionaire in 6 months, because we're funding his invoices. And in fact, he didn't even have to put out any money. You're like, how does that happen? Well, he worked for the first week. He didn't get the 1,200 employees he needed. He got 300 to start. SBDC was holding his hand the whole way and built it up. LA School District worked with the gentleman. But he had 300 employees. They worked a week. The payroll wasn't for the following week. LA School District agreed to let him invoice them every week. For those of you who are in an invoice B2B model or B2G model, you know how important that is to get your invoices out right away, as opposed to the usual, you do work and then you get, you do it at the end of the month and you get paid once a month. And he would have to cover several payrolls because these payrolls were weekly, but not the first week. The first payroll started the following week. We funded him on the following Tuesday, giving him an 80% advance against those invoices. He only needed 50% to fill the contract. And we were able to cover him each week. We put out $3 million on a $1 million business. He didn't have the collateral to pay us back. We were betting on LA School District paying the bills, and it took them a little longer than they said it did. We ended up putting out $4 million. Then they started paying. Within 6 months, he became a multimillionaire. Within a year, he was building homes in Vegas and Victorville. Totally changed his model. Within 2 years, he had called me and he was in Dubai. He just bought a business, was lecturing in Egypt. So that's probably my greatest success story. It's a lotto ticket, winning that. It worked out. Everything worked out great. The cost was irrelevant. But I can tell you our costs haven't changed over the last 5, 6, 7 years. My rates are very simple. They're tied to your invoice. So when you give somebody an invoice, did they pay you the next day? Anybody here? No. 30 days? Some hands, yeah, maybe. 60 days? 90 days? Net never? Anyone have those terms? Okay, we're funding that. You're a bank. You're extending credit. You're waiting to get paid. Should be part of your cost of goods sold. My cost on a 30-day invoice is 2%. Remember I talked about inflation earlier? If you can't raise your prices 2%, you're not going to make it in this world today, small business. My businesses have no problem passing on my costs built into their model, and then their clients are paying our interest rate. If you don't fund, there's no cost. If you need $1 million, I could fund $1 million. I could fund $2 million. You can go after larger contracts. You have to understand and learn. I teach it like a class, our type of financing. But cost, interest rate depends on the type of business you have and how it works.
David,
yeah,
I was just
go on,
going
go
to just broaden that a little bit. I think
Yep.
interest rates are one factor that are driving sort of small business behavior in terms of what they're seeking as borrowers. But we are also seeing some other factors that influence that behavior. In our survey, we've seen in recent years, there's been consistent demand for working capital, and that's been a big increase. So we asked businesses, why did you seek a loan? Was it to grow your business, invest in new equipment? And the number one reason has been operating capital, and it's working capital to cover operating needs. 56% of businesses last year said that was the reason they were seeking capital. And we know businesses are facing a lot of challenges externally, higher costs, gas prices, tariffs, and so that really creates a need for more liquidity. You need money to cover those increased expenses. And that's really what's driving this demand for operating capital. But that's also leading to sort of a speed dynamic we're seeing when we ask businesses, what were some of the reasons you went to a certain lender? Sometimes it's interest rate, sometimes it's relationship, but we're also seeing an increase in speed, how quickly they can fund my loan. And when you think about it, if you're looking for short-term operating capital to cover some increased or unexpected costs, speed is a factor, but that should be something you consider when you're thinking about what Emily was saying. Is this a long-term relationship you want to invest in? And so just calling that out as that is sort of, we're seeing that as an increasing factor in how businesses are making decisions about where they seek capital, but it's something to keep an eye on as well.
Rodney, what changes have you seen or are you seeing in what lenders, investors, and capital providers expect from small businesses these days? I mean, as someone in touch with so many small businesses in the Chamber of Commerce, what do you see?
Yeah, I mean, I think all of us agree that the regulatory process is more difficult and more stringent, and maybe for good reason. But back to the fundamentals, to your point, and as far as interest rates, like they are what they are. They're out of our control to some degree, but there are things that you mentioned that are in our control. And so one of my basic rules of operating a business is making sure that you're always shopping, whether that's your IT services, a bank. There are relationships, but like, hey, you got to put them out there and see what other benefits that you can pick up that might help you a little bit. So. But to your question, things are trending. They're tougher. I think money is still out there. On the big picture of things, interest rates are certainly not where they were in a very high 18% rate in the 80s, 90s. And so, big picture, take advantage of what we can now, at least in San Francisco and in many city centers, there are many vacancies. Take advantage of that. Let's negotiate hard with those landlords and try to extend some good terms.
Thank you. And so we're winding down here, and I'll have a final question for each of you. Just give me your thoughts on this one. What do you think are going to be the biggest challenges to small businesses getting the capital they need over the next, say, 2 years? What is it going to be something structural in the economy, or do you think it's something internal to the business itself, or both? Combination. What do you think?
I think it's a combination of two things: macroeconomic, influences based on how the regulations are, eligibility criteria, federal requirements, and things coming down that then affect small business lenders and who they can lend to and how they're getting their money out and their cost of capital. So that's one piece. And then I think the other piece is just with small businesses, what happens with inflation and where that's going, challenges related to hiring practice, hiring employees, and all of the huge cost of running businesses and the challenges with that, and then raising your prices and needing to do that, and at what point is your customer still going to purchase something at what price? So I think it's both of those.
I would just say I think it's going to be access to information for businesses. When you think about accessing capital, often we hear that it's sort of overwhelming to know where to go, what's the right term, what kind of finance am I looking for, we've seen a lot of changes in lender trends. There has been a really big increase in businesses seeking financing from online lenders versus banks, right, or CDFIs. And so there are some shifting dynamics in terms of lender type, and I think there's a lot more options out there. Some of them are great and some maybe less great, right? And so just this sort of businesses need to have all of the information to make informed decisions about where they're accessing capital, what the right fit is for that business. And so, that's why we're here today. And as everyone has said, there are a lot of resources out there to help you as a business make those decisions, but really try to take your time, ask the questions, shop around, and make sure you're finding the right fit, because there's an increasing a number of options, but there's, having all the information is going to be really important.
Very quickly, I think we're still operating in a time of uncertainty, and for businesses, certainty is our best friend. So with the predictability, return to office, are we all the way as far as we're going to get? I think there's still some more to go there. Brick and mortar retail stores, how are we spending our time and money? Still a little bit of uncertainty there, but it's kind of coming back to what we all remember as somewhat normal. So the next couple of years should be very exciting.
I think within the lending community, AI is going to have a big influence for small business. I'm hearing it among various banks all around the Bay Area. I have at least 2,000 banking contacts together. We probably have 4 or 5 at different levels within the banks. It's coming fast, especially for small business. They're looking to streamline, to make loans quick and easy, let the machinery figure it out. So there's going to be a little bit lack of a human touch, I think, going into the future. My world, it's all touch. We are not even trying to do AI. It's one at a time. We've been around all of these years. We've had one loss in our portfolio in the last 8 years. That's unheard of. There isn't a single bank, CDFI, anybody that can claim something like that. We work very close with our clients. If they come in with us, they know what to expect. We know what their business is going to do. And if there are any hiccups, we're there all the way with them, all the way to help them get through it and get strong and get back out there. But I think in the world, you're going to see that. Inflation ain't going away. If you're all reading the news, we're printing more money than we've ever printed before. Billions are not coming in tax revenue. Billions are going out. There's going to be some real significant challenges as far as cash goes and how the business world reacts to it and how the governments of the world react to what is coming down the pike. We're going to see some big changes.
Okay, thank you very much to the panel. Last thing I'll say is AI is not a substitute for knowing your debt service coverage, knowing your current ratio, and understanding as a percentage of your revenue what your costs are. If any of that is confusing, you don't know what it is, you don't know what I'm talking about, the terminology is new, where are you going to go? Okay, cool. It worked. And my alarm's going. Time's up. Thank you very much to our panelists. I really appreciate that.
So just again, a round of applause for the panel, everybody. Thank them for their insights and information. So before we transition to our next segment, we just want to be able to acknowledge all of the amazing information that you just heard. And I just want to say I'm proud of you guys. I'm proud of you for being here to peel the layers back, to get the information that you need. This is what contributes to being a successful entrepreneur. So we're now moving into our breakout sessions. There are 2 sessions, navigating capital pathways, that we're going to have 2 sessions that are going to be operating simultaneously. So we invite you to choose the session that best fits your business needs. Let me tell you what the sessions are. If you're interested in understanding SBA financing options, including how SBA-backed loans work, what lenders look for, eligibility considerations, and how to prepare and apply, please remain here for the SBA loans session. If you'd like to learn more about state guaranteed loans, financing programs supported at the state level that can help expand access to capital for small businesses, please make your way to the Latinx community room. So let me just say this again. If you want state guaranteed loan information, financing programs supported by the state level that can help expand access to capital for small businesses, that's going to be in the Latinx community room. For those of you that are looking for SBA financing options, including how SBA-backed loans work, what lenders look for, eligibility considerations, and how to prepare to apply for a loan, please remain here. You will have 15 minutes to transition between here and getting to your sessions. This is a great time for your bio, to grab some water, what have you, and make your way to your session. So I will see you all back soon, and lunch will be served after the sessions. Thank you for that. So now welcome everyone to the SBA loans. The moderator is going to be a friend and a fan of mine, and not a fan of mine, but a friend of mine. I'm a fan of hers, and my inspiration in my business from the financial standpoint. So I'd like to introduce Ms. Gwendolyn Wright. She is the business advisor for the San Francisco Small Business Development Center, SBDC. She's also the financial consultant at Wren Center. So I'm going to turn this panel over to Gwendolyn Wright, and she's going to take it from here. So everybody, round of applause for Gwendolyn, please.
Thank you, Denise. Thank you so much. Welcome, everyone. Thank you for spending your morning with us and hopefully your afternoon as well. As Venice said, my name is Gwendolyn Wright, and I'm a small business consultant, and I have been on this journey for over 30 years. I established my San Francisco consultancy in 1995, and since that time, I have spoken with and worked with thousands of small business owners, and I know that getting a loan continues to be one of the most difficult tasks for any small business that's looking to get started or looking to grow. But we have a really great panel today who's going to help you, because I have a few questions before we get started, okay? So let's see, get my glasses on. Now, show of hands, how many of you are here looking for financing today? Because that's real important. Hopefully I see everybody's hands up, right? You too, Venice, that's it. Yes. Now, how many of you consider yourself ready to apply for a loan today? Okay, a couple, a few. All righty, we'll see. Now, who has been in business, and by in business, I mean revenue generating for 3 years or more? Show of hands. Okay, that's a good group. Now, how many of you are in the concept phase or the startup phase? Raise your hand. Okay, good, because this will give the panel an understanding of what type of questions that we're going to direct, so you can get as much information as possible. So let's get started. Carla, come on up. Carla De Leon is the Chief Lending Officer for Main Street Launch, one of our community development financing institutions. Hey, oh, yeah, come on in. You could have come up this way as well. I didn't even know there was a back end. Oh, okay, that's what they're directing. Steve Ward, SVP Business Services, Redwood Credit Union. Come on up, Steve. You're welcome. And then we have Oli Tustin, Vice President and SBA Business Development Officer, U.S. Bank. Oh, already. Come on in. Yeah. Mary Norris. Hi, Mary. Business Loan Advisor and Manager at Wells Fargo Bank. And last but not least, we have Philip Wong, Market Strategist and Business Development Officer for BMO. Welcome. Let's give them a round of applause just to get started, because they have so much information, and our goal today is to provide you with some practical insights and at least one action item to improve your opportunity for financing success, okay? So now, panel, I'm going to be asking 3 questions, and I want you to answer within a minute or so, okay? And these are things that you answer all the time. So I want to start with, what SBA products do you focus on? 7A, 504, microloans, export, or lines of credit? That's question 1. What is your typical loan size? Question 2. And what is the average interest rate that you're looking at today and loan fees? And we'll start with Carla and work our way down, okay?
Okay, does this work? Wonderful. Hi, everyone. My name is Carla De Leon. I am at Main Street Launch and Working Solutions, CDFI. We are an SBA Community Advantage lender, which is a type of 7A loan, which goes up to $350,000. So that's the type of SBA financing that we do.
Okay, and did you say the typical interest rate?
So the typical interest rate, like most SBA loans that are framed through prime plus a spread, our loans are at prime plus 4, with the difference being that we don't take personal real estate as collateral, so that's why the interest rate's slightly higher. And our average loan size is about $250,000, but interestingly enough, this year we've actually seen smaller average loan sizes, so folks are requesting less.
Okay, thank you. Steve, how about you?
All right, well, loaded question. Lots to unpack there. I appreciate the opportunity. Steve Ward, I'm the Senior Vice President of Redwood Credit Union's Business Services Group. And so we serve 21,000 businesses across Northern California. And we go from startup to 100 years in business. And the interesting piece is we're a preferred SBA lender. So we do all our underwriting in-house. We do everything from SBA Express, for working capital lines of credit to 7A loans for expansion or acquisition, and we're the #1 SBA 504 lender in the San Francisco district, which means we do more SBA 504 loans than every bank in the area.
All right, very good.
And so, excited to be here.
Thank you. What is your average
Average
interest
loan
rate?
size, we just did a $125,000 SBA Express this month, and we did a $4 million 504.
Okay, so that's a
So
big
everything
spread.
in between.
And your average interest rate and fees?
Real estate secured, we're in the low sixes. As she mentioned, as it gets unsecured, it gets closer to 8, 9, 10%. But the interesting piece, and if you don't know this, we cap our credit card interest rates at 17%. So the highest you will ever pay,
That's high.
well, it's for a credit card.
That's, well, it's low for a credit card.
That's
Let's
very
put it
low
that-
for a credit
right,
card.
it could be 30%,
So,
right?
we, as a credit union, we are a not-for-profit. We can pay you higher rates on your deposits and lower rates on your loans.
Very good, very good. Thank you. Oli, hi.
Hi, Oli Tustin, U.S. Bank SBA. Been there for 25 years. I primarily focus on 7A and 504. And we are known, U.S. Bank, for being a portfolio lender. So what does that mean for you? That means that we do not sell our 7A loans in particular on the secondary market. So we can in turn modify and or have more options on both rate and terms, which is important, and that includes after closing. Average loan size in the Bay Area is about 1.4 million. We do 500,000 to 20. We just closed our largest loan last week, and that was over 20 million. So a bit of a range. And as far as interest rate range, it depends, of course, on the size of the loan, strength of the deal, et cetera. But I would say in general, if it's a 7A, which as mentioned is going to be based on prime, we can go prime minus a spread or prime plus, depending on if it's a business acquisition versus collateralized commercial real estate purchase or refinance. A 504, there's also going to be more options of 1, 5, 10, 25-year fixed. Thanks.
Okay, thank you. Hello, Mary Norris. First time meeting you. Pleasure.
Hi, thank you. Hi, everyone. I'm Mary Norris. I'm with Wells Fargo, and I manage a team of commercial lenders. Primarily what we do is SBA, and 7A and 504 both. We've been doing it for many years, and it's the true core of our business. Our loans typically are going to range from about $300,000 to, on the high end. We don't do a lot of the high end, but maybe $10 million, I'd say, is about as high as I've seen us go. And we do a lot of real estate. We do business acquisitions, startups, just about anything a business needs, right? We're going to be able to fulfill that with those products. And was there another?
It was just 3 typical size.
Oh, the interest rate. Right. That is such a range. It's obviously real estate is the lowest because we have really good collateral, right? And hopefully we never get to liquidation of collateral, but that's really how it works. And if you're talking startup without collateral, that can be probably these days 7 to 8% range. Business acquisition, a little bit less, maybe 6 to 6.5, and then your real estate deals, they're in the 5.5 to 6.5 range these days.
Okay, thank you. And Philip.
Hi, everyone. My name is Philip with BMO Bank. I'm the market strategist for our bank itself. I have oversight 147 branches for the region itself, but also we talk about lending a lot. Like Wells Fargo, like U.S. Bank, we operate almost similar on the SBA products, 7A, 504. Average loan side right now, the smallest we've done was about a 350 size for an SBA. We are changing some of our products along the way. We're going into SBA Express, and that's probably within the next 3 months. We have also modified other loan products called our neighborhood lending products for our areas where we have our banking centers at. So that's a product that's standalone away from SBA, $50,000 to $100,000 in a line of credit or a loan. Interest rates, of course, varies depending on the type of collateral we're looking at, but also the type of risk. Every single bank here, even our CDFI partners, look at risk and how that risk breaks down to where we modify the rate depending on risk itself. So just know, open, honest conversations are always great, but no, looking forward to speaking with every single one of you. And welcome, and this is one of the best forums to ask questions.
Thank you. Now, I want to ask this question. Does everybody understand what an SBA loan is? Because that's important. So I thought maybe we need to talk about that. So who would like to field that question? What is an SBA loan? And the reason I'm asking, because some people think that SBA is the direct lender, right? So who would like to?
I can talk a little bit about that, only because I've been in the industry a long time. But SBA is just government-backed financing, right? The 7A program, the government provides the lender with a guarantee for a portion of the loan, typically about 75%. And so lenders can do things like look at projections, and that's why we can finance startups, because we have the partial guarantee. Now, there are guidelines, there's, SOPs, and those of us who have been in industry a long time, it used to just be a big book. Now everything's digitized, right? But SOPs give us the guidelines we have to follow. So even though we get a partial guarantee from the government, we're still looking for collateral, we're still looking at your credit score, you still have to come in with some equity skin in the game. So it makes it easier for us to do things that we couldn't do in conventional financing. And the same for the 504. The 504, we do the first permanent loan, and the SBA comes in behind us with what they call a debenture. It's simply a bond. So it puts us at first position, 50 to 60%. It's a pretty nice place for a bank to do. Again, it allows us to do things that typically we couldn't do conventionally.
Okay, very good, very good. Now, let me ask another question, because this to me is very important, because there's been some drastic changes in the SBA lending underwriting environment over the past, I'd say this year for sure. The biggest hit happened this year, right? So, Philip, you want to talk? Are you SBA?
Yeah. So BMO is a preferred lender for SBA. The hardest thing, and this was really a gut punch when I had at least 10 loans in pipeline for SBA, and all of them are green card holders. That was the biggest gut punch we saw, and I see you nodding. It really put an impact on us as lenders because of the type of clients that we were bringing in. We know from the numbers that SBA or small business owners are taking up 75% of this whole economy, right? And a lot of them are green card holders. So that really impacted those 10 loans, and we had to pivot really fast. And it wasn't a fun pivot. And I'm hoping as things change, we go back to where the normalcy of how SBA was being run,
Right.
to where it actually can support these people.
Does everybody understand that? No? Yes? Who else would like to talk about it?
You have to be a U.S. citizen is the new, starting March 1st, out of the blue. Before that, and I agree, because of kind of the entrepreneurial spirit, a number of borrowers, for all of us, were green card holders, and that was eligible until recently. So our hope is, and it's regardless of percentage ownership, it could be 1%, 2%, spouse, if they're on title. So that's what. Okay. And then I would add, the other part that's now correcting is that there were certain, loosening at the time seemed good, over the last 3 to 4 years that caused the SBA to take on more risk, or lenders in this case with the 7A, to take on more risk. And many of those loans have gone south. So the so-called flagship program, the 7A, which is, of course, a federal government guaranteed program, has traditionally been a zero subsidy program, meaning that the SBA guarantee fee that the borrower pays for the program itself. That changed, and that can be problematic because it's at the whims of Congress, and it's bipartisan as far as the support. So some of those more, let's just call it risky, policies that were in place before have gone away, but in turn, there is a transition period going on right now. And I think most of us on this panel are with institutions that are okay, but that has been under scrutiny.
Yes, okay. Now, Carla, I wanted to ask you, because I know you did a lot of these loans, the merchant advance. So how has that changed?
Yeah, so one of the new rules that came about in the last year is that we are no longer able to refinance merchant cash advances with SBA loans. We actually, as a small business lender, we refinanced a good amount historically of merchant cash advances. So, you know, in the panel that was before here, Andrew pointed out that, you know, people are taking on online loans that have really high interest rates and short terms. Historically, we were able to refinance those, right? And then that spreads your repayment term for 10 years. So it was a huge savings for businesses, and they really were able to improve their business cash flow through that. But unfortunately, that's not an eligible use anymore of an SBA loan.
So I wanted to bring that up first because that is very, very important, and it has changed things. So we have to adapt and move forward. Yes.
I think everybody brought up really good points on the fact there's been a lot of changes over the last 2 years. There's going to be a lot of changes over the next 2 years. I think everybody on this panel is a preferred lender, has deep knowledge. Like, I don't expect you to understand what an SOP is or read the updates that the government sends us. But like, you need to have a relationship with a banking partner or a credit union or CDFI who can help you understand it, because it's going to be different next month than it is today.
Yeah, that's true. So we adapt, right? That's the entrepreneurial way. So that's really important. We have a question.
How much weight do lenders put in contracts as far as that being used as collateral?
Well, depending on, the type of contracts and things like that. If they're government, or are you heavily weighted on one type of contract that you're receiving in your AR over leveraged, more than 50%, or so it just depends on the type of contract that you're.
I'm going to 12.
We don't have a sales department. Our income has been basically word of mouth, been in business in California for 20 years. Actually working with somebody. I am actually working with somebody from the SBA to help us put together a sales department. We've never had one. So we have zero advertising budget, zero marketing. From an asset standpoint, it's
Sir, excuse
contracts.
me. We'll go into that a little later, okay?
Oh,
We have some other
I
questions.
didn't know where we were.
Yeah, no, we'll go into that a little later. We have a Q&A at the end. I just have some specific things I want them to cover. For example, panel, how do you evaluate startups differently from established businesses? So who would like to take that on?
I guess. So we fund pre-revenue startups with our SBA loan program up to $350,000. When we're looking at startups, we're looking at a variety of things, but I would say the top 3 are looking at the owner's industry experience. And then in terms of business, there is no business cash flow, so we're going to look at 2 things. We're going to look at projections, right? So we're going to look at your business plan and how that's informing your projections. And then we're also going to look at your outside income. Can you service that debt in the event that the business isn't generating any cash flow? And then I said 3 things, and I'm not remembering the third now. But basically, that's what we're looking at. We're seeing, can you repay the loan through your personal sources? How is your personal credit? That's my third one. And what's your plan for repayment?
Okay, now, I have a whole new thing I'm going to ask you guys to do. You wonder why you had that little notebook and pencil. So, lenders, I want you to write, this is like 5 C's of credit. I mentioned this to some of you earlier, right? So now write on one page, credit score. You're looking at me, but I want you to get the writing. Credit score on one, collateral on another. Give you some time to catch up, because we're going to rank these from 1 to 5, and we're going to see which ones you rank the highest, 1 being the highest, 5 being the lowest. So we have credit score, collateral, cash flow from business operations, of course, capacity for industry experience, and then cash from owners. So take your time. So 1 to 5, credit score, collateral, cash flow, capacity, and cash from owners. Just trying to delve into their mind to see how they're thinking, to share that with you. Oh, because they told me it wasn't recorded. I'll tell you that later. Got it? Ready? Okay, so your number one. Let's flash your number one and see what we've got.
I did cash flow.
Cash flow.
Cash flow.
Cash flow.
That's number one. Cash is queen. All right, number two. What's your second one? Either or, in your mind, Carla, whatever you want. What's that? Number two. What is your number two? Capacity, number two.
I put credit score.
Credit score number, okay.
Capacity.
Capacity,
Yep, industry experience capacity.
okay.
Capacity.
All right, okay. So now, number three. Credit score, holler out.
Capacity.
Capacity, okay.
Cash liquidity.
Okay, that cash on the table,
Cash equity injection.
okay.
Credit.
All right, and that's number four? Cash from owner,
Cash.
cash from owner,
Collateral.
collateral,
Credit score.
credit score. Philip?
Cash.
And number five? Collateral, number five.
Collateral.
Credit.
Credit,
Collateral.
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 All right, you see? Everybody's a little different, so you got to make friends. Now, this is a question for you, audience. What do you think is the number one reason small business loan applications are declined? Raise your hand, and then we have a mic, or if you have a loud voice, you can just kind of shout it out. But raise your hand so we can call on you. Yes. So the business plan is the number one reason you think their business application is declined. Okay, who else? All right, Ms. Venice.
Yeah, I might be cheating a little bit. Just financial preparedness, not having their financial documents ready.
Okay,
Don't have the financial reports to be able, that's going to be important to tell the story.
all right. What else? Yes, and then you.
Instability in cash flow.
Okay. Number one reason loans are declined. Yes.
Credit score?
Credit score. And one more.
Business is too dependent upon a single person. Basically, a business is built around one person. That, to me, would be a huge risk from a lender.
Okay, now, lenders, let's hear quickly what you think, or what you know.
So for us, this is sort of a side, but most people don't complete the application. So to the point of not having prepared financials, that's our number one. And then insufficient cash flow is usually number two.
Yeah, I mean, I would say lack of being prepared to present your story in a way that we can easily project out that you're going to pay the loan.
Okay, so a lot of that is that business plan or financial projections, yes?
Exactly.
Okay, Oli?
I would say first off, cash flow. Second, financial preparedness. That ideally an accountant and/or the financials are in order. Third, if it's going to be a business acquisition, it's going to be experience. That's not necessarily what I would prioritize for a real estate purchase. But I would also emphasize, as the others, it really is the attention to detail of the application and financials.
Yeah, I'd agree with what each of you has said. Being prepared, when you hear those statistics on declines that they had quoted earlier, those include the people that just don't give us what we need, right? We've given them the checklist, we've walked them through it, we've helped them, and they just stop. And maybe it's a little fatigue, or It's overwhelming to think about all the things we need to look at. So decline doesn't necessarily mean we looked at it and you don't meet our criteria. Oftentimes you just don't get us what we need, and there's regulations that we have to follow. And those regulations mean after so many days, 90 days, we have to decline the deal. So.
Very good. That's good information. And
Everyone here is it's exact same thing, preparedness. We are numbers geeks up here. So we ask, we look, we ask you a lot of questions. We want to know that when we're giving out a loan in the capacity that you can repay, that you know how to operate the business correctly, and that you have the experience to operate that business. So from that standpoint, we need you guys to be prepared when you come up to us. We can walk you through every single process in the loan. We can do that. But just be open and honest in coming to us in what you know, how you know it. Even though sometimes when we say, no, you're not ready now, we have the resources to bring you to where you can get ready. So just know that. It's not just no right now. It's how we can get you to the point where you can actually be successful with that loan.
very good. Thank you. Now I'm going to talk about some real world scenarios because I look at a deal, every hour it seems like. So here's one, and it's familiar to many of you. So A, bakery has been open for 3 years. Revenue is currently $450,000. The owner wants a $150,000 SBA loan for expansion to a second location in downtown San Francisco. Credit score about 680. Business is profitable, but bookkeeping is 6 months behind, and the collateral is limited. Now, audience, raise your hand if you think this loan gets approved. Nobody knows, huh? We don't have one hand that thinks it's going to get approved? Wow. Let me turn it to the panel. What do you think, panel?
Well, we definitely don't have enough information to know if it would get approved.
I know, but
does it have
what's
legs?
this?
I think the question is, does it have legs, right?
Right.
For us, absolutely. We fund
Right.
second location.
What's the next step?
The next step is having a conversation to understand the revenue's one item. We want to know what the net income is. And then also knowing what the total project cost is, how much they have to contribute to that second location, and then looking at sort of, again, the full financing and what the business plan is for that second location.
Okay, I'll take one more response to that because I have a couple more.
And that's is there a business plan?
Okay, there we go. That's the next step, business plan, right? Okay, now listen to this one. A new entrepreneur is seeking a $3 million 504 loan to purchase a commercial property and to do some leasehold improvements to create a maker space. He does not have any industry experience except a love for the craft, but he has put together a strong management team, has good credit, and much more than 20% cash on the table. Now, audience, do you think this loan will get approved? Like, I don't know, maybe. Somebody, yes. Okay. What are the next steps? Who are we going to go to next?
I can speak to that. There's a lot of good points to it, but the industry experience really concerns me. That can be a deal breaker, and I know at one point, I am not up to date on current statistics with SBA, but at one point, industry experience was the #1 reason loans failed. So it's really important, and when people come and talk to us, we ask about that right away. And if you don't have it, well, that's part of your preparedness. Go get it. Go work somewhere, even if it has to be on a volunteer basis, so you get that direct industry experience. What is the day in the life of an owner who does this, right? I grew up in a family-owned restaurant, similar to our speaker this morning, and it's hard, and everyone thinks they want to have this great restaurant in San Francisco. It's going to be a big hit. Everyone's going to come. I'm going to get the Michelin stars and all this. It is hard work, and finding employees, finding reliable employees. So it's just an example. Restaurant is an easy example, but really any industry, we're going to want to see some relevant experience or some transferable skills. So when you put your resume together, make sure you're focused on the skills that are important to be successful in that type of business.
Very good. Now I have another one more. An existing day spa grossing over $1 million and netting $125,000 is seeking $200,000 to expand to LA and Miami. They're also contemplating bringing on an investor, an existing client who is from. What do you think? One more time. Will this loan get approved? Yes. Anybody else? Next. All right, next steps, lenders.
You say expanding?
Yep.
From San Francisco to another state?
LA.
and
LA first, and then
LA
Miami.
And Miami. I would say it really depends, because depending on their capacity to really have 2 locations and even expand into a 3rd location, right? How much capacity can they, as an individual owner, if it's an individual, or their investors come in to bring on enough staff for him to manage it remotely? So the question is, how, do they have capacity to do that on that growth perspective?
So what about the SBA?
Is the expansion dependent on the investor from Taiwan?
Yes, I think so.
Then we have a problem.
Yeah.
With this avenue.
That's what I wanted to hear. Yeah, that's an issue. So we have to do something else because of that. And that ties back to what we talked about originally in terms of the underwriting, right? Because these are all real stories. And I thought about that, and I'm like, oh, I've got to go tell her this. Right? Now, she's not taking them on yet, but I've got to say this is an issue.
Well, our team spends clearly a lot of time on underwriting and vetting, but just understanding the ownership structure has become more important than ever.
Yeah, very much so, very much so. Okay, so that's good. Now, a couple other questions. This is really important. What makes you say this borrower is ready? Think about that for a minute.
Ready to expand?
Ready? No, just not this borrower, but a borrower. If you have a borrower and you say this one is ready, why do you think that? Why do you think they're ready?
First off, I think for most of us that have been doing this for a while, there's a sense fairly quickly on the level of confidence, competence, and preparedness from a borrower, regardless of whether it's going to be a business acquisition, a real estate purchase, or some other loan request. So that's first and foremost. That goes back to their expertise and believing in themselves first and foremost. From that, then we can extrapolate to, are the financials, back to the cash flow that most of us said is first and foremost, is that there? If it's going to be a business acquisition, as we mentioned, but to emphasize that transferable skills component is critical. So anyway, that would be my
One other thing we haven't talked about is with SBA lending, lenders have to track where the money that you're bringing to the project came from, right? And we have to get documentation on that. So one of the other things about being prepared and ready is make sure that money is sitting in an investment account, a bank account somewhere where we can go back a few months and track it. And you can have gift letters. It can be a gift from a family member, a friend, or someone like that. But even with that, we have to track who provided that money. We have to see the letter. We have to see the account that it came from. So that's, I think, something important to note, because there's some lead time there, right, that you want to make sure that's established.
Okay, very good. Anybody else want to answer that question?
So earlier, and I think she's went to the California financing piece, but I was talking to a woman named Ada who owns a daycare center in Noe Valley, and she was telling me about the challenges of TK and kind of taking some of for any of us that have kids, there's some really good things to it, but her very valid point was there's no after-school care, and so she's trying to figure out if she's going to pivot to opening a second location, or expanding to after school, or going to 1 to 3 year olds. And so having those kind of conversations where they've talked through a bunch of different plans and vetted them out and explained why, there's many ways to grow that business. And when you get stuck on one path as a business owner, that scares me as a lender. Because if something goes wrong, we're out of options.
That's right. That's right. Okay, another question. All of this has to do with preparedness and readiness. So if the business is not loan ready, what are a few things that you would recommend that they do over the next 6 months to improve their opportunity of getting a small business loan approved? Anyone?
I think for us, it really depends on what it is that is keeping them from being loan ready. So as an example, if someone is expanding to a new location but they haven't yet secured a location, that's a very different set of things that have to get done to be loan ready, as opposed to someone who is looking to acquire a business, right? And maybe they haven't even identified the business that they're looking to buy. We often have conversations where they want to do this, but they don't actually have the business yet, right? So it really depends on the type of readiness, but I would say having conversations with advisors can probably help you get on the right track.
And ask for direct, honest feedback on where the gap is. Because as she mentioned, it could be 50 different things. And if a lender says, well, now's just not the right time, that's not the right lender.
Ah, very good. Take note of that.
I
Next.
think, oh, I'm sorry. Interview banks, because we're interviewing you. We're asking you a million questions. Interview banks, because there are many different types and kinds. And then think about, where is my business? Where do I want my business to go in the next 5 years, 10 years? I have to grow, right? So my bank has to be able to take care of me through that period. So just, there's a lot of online stuff right now, and I know I see it, I use some of it, but be careful, right? Will they be able to provide your treasury services? Will they be able to do your merchant, your payroll, deposits? There's a lot of things that go into running a successful business. Capital's super important. They have to be able to lend to you, right? But make sure you're considering all of it, and talk to more than one person, one bank, right? Talk to several and do some research.
Very good. Yes.
Most of the time I would tell people, whenever you come to a bank, right, sit down. The open, honest conversations are always great, because we'll go back and ask you the same questions. Just know, if you give me a loan file, I send you a needs list, the whole thing is there. We'll run through the numbers. We'll go through an honest conversation with you. Just be able to know that we want to have these conversations with you. We're your advocates every single day. We sit in positions that we're your advocates for the bank, within the bank itself. We want to get that loan done for you. But at the same time, be there with an open set of eyes and ears to listen to what we're seeing. That will help you be more prepared in the next phase, and even the next phase afterwards. Because remember, that person that you start off with as your advocate, they want to grow with you too.
Here we go. Now, we want to open up the floor for questions, because I think we've got like 7 minutes. Yeah, 6 and counting. Okay. And then Bernice is going to tell me, you, sir, and then you.
Can you provide more detail on capacity? Like what you mean specifically by capacity? To expand, is it?
My interpretation of capacity, it's more for a business acquisition or a new buyer/borrower who does not necessarily have a business currently, and looking at their transferable skills. That's part of the definition. And the second part of capacity is, as the word would imply, having for an expansion, for example, having the ability to, if it's an expansion, to show that there is the time, the resources for it.
Right, because when I was talking about the person who wanted to expand in LA and to Miami, I'm like, well, how are you going to gather your team? And how are you going to manage them from a distance? And those kinds of things, right? That has to do with capacity. Good question. It was someone else, the lady there. It was the lady there, and then you, okay? Did you have a question? Yeah. No? Yes. You, and then this gentleman.
What advice would you give to a new business owner I've been open about a year. I've more or less exhausted my initial loan. I could use a line of credit or an additional loan. Built a foundation, seeing increased revenue, but, not profitable yet.
I mean, it's have a one-on-one conversation with us at the break. Like, that is a very likely or a very usual scenario, but there's nuances to all of it. And I think any one of us would want to hear your story on, why bet on you?
Yeah.
Like, tell us the story.
Okay.
All right. And then gentlemen up front.
Let's talk about preparedness. Besides
There's a, use a mic.
regarding preparedness, besides tax returns, besides credit scores, besides P&L, besides bank statements, what else is there regarding preparedness?
Do you have a personal financial statement?
I forgot to say that. Yes, I add that. Yes.
Is it updated and accurate?
Absolutely.
Yeah, and so that's a huge piece of it, to be able to tell your story on what you've
So
generated.
people come to you and want money and they don't have that stuff?
All the time.
Oh my God. Okay.
Another one that is really common is for us is a collateral list, so a list of all of your assets.
And also
and debt
also
schedule.
Debt schedule.
Debt schedule.
Yep.
And making sure that it matches your balance sheet.
And the other nuance, it sounds like you have it, but in general, what we see is end-of-the-year financials, which don't necessarily reconcile on the balance sheet, profit and loss balance sheet, which helps to have a good accountant and or minimum bookkeeper, and to have updated profit and loss and balance sheet as well through at least within 60 days.
And of course, the application.
And I'd say also, sometimes people don't tell us everything. It's better to tell us everything right from the start, because then we're better prepared to help you get there and figure out, well, this is a weakness. Now let's figure out how we mitigate that. So the sooner we know, the better. We do background checks, we do credit checks. We're going to find it. We always do. So it's best to disclose it right up front.
So I didn't leave anything out.
Well, so there's always more documentation needed. So as an example, with your debt schedule, you're also going to have to provide copies of your promissory notes, a most recent statement to verify those balances. And so if you're able to have those things together, it's going to make your process faster.
Okay, any last words? Because I got the sign, we have like a minute and a half.
Really quickly, if it depends on the situation. So if it's going to be a startup, there's going to be, and or a business acquisition, there's going to be more emphasis on resume than, say, an existing business that's buying a building, for example. Still need it, but not as important. And business plan, just to reiterate, it is very important to have well thought out 24-month projections, and or more longer out, monthly projections with line item assumptions to both the revenue and the expenses for those that are doing more of a startup mode.
Okay, anyone else want to share their wisdom and knowledge? If not, yes?
I would just say be tenacious, don't give up.
There you
Keep
go.
going. You can get there. If you give up, then you spent all that time for nothing. And we are there to kind of help you. We'll go through a checklist, we'll answer your questions, and our underwriters will do the same thing because we want to get to an approval.
Very good.
You guys have to remember, thousands of people got invited to this, 200 RSVP. You're the ones who actually showed up.
Yeah.
You're the people we want to talk to. And so, but continuing the discussion.
All right.
And advocate for yourself.
Okay, now a nice round of applause for this wonderful panel. And thank you so much for showing up. It's very important. And we're on time, right? Yeah, we're on time. All right. Thank you so much.
Thank you.
You're welcome. Thank you.
Thank you, Gwendolyn.
See, I always bring this because I know time. I said I always bring an analog clock to know, because if I look at this, I can't see.
Don't forget your laptop.
Oh. Yep. All right, sweetie. Let me get mine.
Yeah, we're good.
Thank you. Please. Yes, start.
All right, everyone. So one more time, let's give a round of applause for our panel guests. I hope that you all have found this information very helpful. We are now going to be able to take a break, but let me just do a couple of notes. So You're going to move into lunch, and then you're going to proceed to lunch in the Latinx community room. So follow the signage, and or there will be Renaissance staff outside to direct you. The Latinx room is right near the area where you got your coffee and juice and bagel this morning. So it's not far at all. And so also the I'm sorry, I'm reading it wrong. The breakfast and lunch was catered by Creative Ideas Catering by Lena Mills. She is a Renaissance graduate. So you have 30 minutes. Please get up, get your lunch, network for a little bit, and then come on back for the last panel of the day. I want to acknowledge lunch. How was lunch? Great, tasty? Well, lunch was provided by Creative Ideas Catering. It is a woman-owned, Latina-owned business. It's a catering company by Lena Mills. She is a proud Renaissance graduate. So I didn't see her here today because I'm sure that she was out. Thank you. I didn't see her here today because I'm sure that she's out. Her business is growing like wildfire. So glad that we had a chance to experience a Renaissance graduate, and now we get a chance to experience some other Renaissance graduates. So put that in the comments, because I'm not in charge of that part, but whenever the survey comes out for the feedback, then put that in the feedback. Thank you so much for that. All right, so we are now moving into our small business owner panel, where we'll hear directly from entrepreneurs who have successfully accessed loans and with the support of technical assistance. This conversation will center on real-world experiences, what it actually looks like to go through the lending process, the challenges business owners encountered along the way, and the key lessons they learned as they navigated financing and growth. Please join me and our panelists to the stage. I'm going to call up the business owners and then introduce our moderator. I'd like to invite to the stage Peter Dorrance with Out of Sight Pizza. Peter is an SBDC client. I'll invite up Lindsay Knox from Ladha Jewelry, Renaissance client. And Tanya Weekland, owner, Your Happy Place, Renaissance client. And the moderator, Jermaine Carter Gibson, Northern California Small Business Local Engagement Specialist from Cal OSBA. So let's give them our attention and a round of applause. Okay, thank you. I'll keep the timer down and you know when we're like 5 minutes and then 2 minutes. Okay, good deal.
Good afternoon. See? Good afternoon. Now listen, guys. I know it's after lunch, and this is where we lose people. So kudos to you all for being here and staying here. But before we get started, I want to shout out Renaissance and the SBDC for putting on an amazing program. Make some noise for them, please. So my name is Jermaine Carter Gibson. I'm from the California office of the Small Business Advocate. You heard from my director earlier today that gave the keynote. I cover Greater Sacramento in the Bay Area, so I cover 14 counties. I'm also a small business owner myself. I am a children's book author, public speaker. I'm building a nonprofit, and I'm a girl dad of 3 teenage girls. And I don't say that to say, hey, yay me, that I'm doing a bunch of stuff. It's that I know you guys were looking at your agenda when you were coming. You're like, man, I got to do this and this and this for my business, and you showed up anyway. And so this is the spirit of entrepreneurship, and we're all tired, guys, but we're doing the work, right? So we are going to have an amazing panel. You're going to be able to hear from folks that are on the ground that are doing the work. We're going to go and jump right in, but what I want you guys to do is introduce yourselves and tell them a little bit about your business before I start asking you questions. We'll start with you, Tanya.
Hello? Yes. Hi, my name is Tanya Weekland Wilhelm. I own Your Happy Place. It's a wellness center in the Excelsior district of San Francisco, an up-and-coming neighborhood. I'm a licensed esthetician, a massage therapist, a Reiki master, an Ayurvedic health coach. I teach yoga. So we hold space for private sessions, for people to take care of their bodies inside and out, mind, body, spirit. We have a storefront with health and beauty products. And we are currently beginning to expand into a group space where we can offer yoga, community events, and really want to hold space for indigenous ceremonies and practices.
Love that. Thank you so much. Lindsay?
Hi, my name is Lindsay. I'm the owner and designer of Ladha Jewelry. I'm based in Oakland, and I've been in business since 2019. My company is basically just me. I'm a solopreneur, and I have vendor partners who I work with, but primarily I'm a handmade business. I work in silver, bronze, and fine metals, so gold, diamonds, gemstones. And my work is inspired largely by the matriarchs of my family who are very well traveled. So growing up, I was exposed to all kinds of beautiful treasures, and my collection kind of echoes, you know, a sense of wanderlust, but also classic pieces that you can mix and match and wear forever. Ladha means flavor in Swahili. So when I started to think about my branding, I said, oh, you know, jewelry's like seasoning. What do you want to put on that day? How do you want to feel? You know, bold, subtle, etc. So that's the story behind the name. And I like to describe my collection as kind of laid back luxe. So perfect for Bay Area folks who I know you'll understand. Thank you.
Awesome. Thank you for that. And last but not least, Peter.
My name's Peter. I'm co-owner of Out of Sight Pizza. We are a slice shop right up the block and Golden Gate and Larkin, and then we have a second shop in Chinatown, Clay and Montgomery, and they're in the process of opening up a bar on Turk and Larkin. Yeah, mainly just pizza, but we kind of turned it into a catering company and do it all just to make money and make it work.
Awesome. Thank you, panelists. And so I don't think the panelists saw before, so by a show of hands, how many business owners in here? Business owners? And how many of you are looking to access capital? How many of you have accessed capital before? Okay, so we got a lot of new folks that are looking to access capital for the first time. So I think this conversation will be very fruitful for them. So do this for me. And Peter, we're going to start with you. I want you to take me back to the beginning, right? What were your early goals when you launched, and what types of funding did you first explore?
It was a pandemic, you know, like fun project my partner and I were doing, just pop-up stage at a wine bar, drinking wine, making pizza, you know, being around community. It was fun. And then it kind of blew up and people liked what we were doing. And boy, from then, you know, we found a perfect space here in the Tenderloin, and it's like, okay, we got to get funds. You know, I didn't go to business school. My partner didn't either. You're cooks. You know how to like chop onions. That's it. So you know, you ask around other people in the industry what they did, and we did a thing called SMBX. It's a small business crowdfunding bonds, which at the time was what we needed. We raised $100,000 at, I think we got 8.5% or 7.3% at the time, $3,000 fee to the SMBX people. It's a lengthy process, maybe like a month or two, or they like get to know you, they look at your books, which, you know, you have like, we maybe had 8 months, a year at a pop-up stage, so not much to look at. And then as we went further, we had to get more loans, so I've gone through that, you know, crowdfunding bonds to traditional loans, third-party loans, donations and grants, and then even we just got another loan for this bar, an SBA loan. So I've kind of done every funding you could imagine, and I don't know, there's not one that's better than the other. Ideally, if I could, it would be get like an angel investor, you know, to stay away from the banks would be the best case scenario.
Got it. Lindsay, we're coming to you. So early goals and the first type of funding you first explored.
Well, I too am a pandemic-born business, although I started in 2019, just before COVID, as a side hustle. I was working under another jewelry designer at the time and kind of doing my own thing, my own time on the weekends and after work. And, you know, just working out of my garage, putting together pretty things to sell to friends and family, building a website, very organic beginnings for me, very slow growth. And when COVID hit, I was laid off from my full-time job, so I said, well, this is a sign that I should probably go all in. And, you know, at that time, I got some pretty meager donations from, you know, family members who were just trying to be supportive. And I took a trip to source gemstones, and, you know, my mother-in-law wrote me a check, you know, I think for like $1,000. I was like, wow, I could get so much cool stuff with this. Now I think back, I'm like, oh, times have changed. But, you know, really slow growth. And then in 2020, you know, when I was basically on lockdown, just grinding in my garage, I started to notice all these grant opportunities pop up. At the time, you know, this was just, you know, around the time of George Floyd, and a lot of Black artists and small business owners were being spotlighted throughout the community. So I really leveraged that traction, and I applied for grants through nonprofits, very small amounts here and there. Sometimes it came with doing like an incubator program or some type of mentorship. So I really just hopped on that train and started just very, very slowly growing my business. So my first goals were really about exposure, building the collection itself, getting those basic things set up like a website and you know, branding elements, and the jewelry itself to sell and get out there. So I hadn't even really thought about going out for a business loan at that time. I think I was just kind of okay being like where I was at, but that quickly changed as my business grew. So.
Thank you. And Tanya, same question. So early goals and the first things you explored.
So for over 20 years, I ran my business as a solopreneur in a single treatment room, and I was completely self-funded. I never explored the option of getting a small business loan. Grants have come along in my life here and there, and I'm very grateful for them. And COVID affected my industry in cosmetology quite a bit, yes. So before COVID, I was pretty much completely self-sustained in my business. And, you know, the last several years have been a time of restructuring. And I had an opportunity to open a storefront, which was always a pipe dream. One of my clients owns a building and said, why don't you open your spa here? So I went on this journey to get a loan. I had a credit score over 800, decades of industry experience, a baseline clientele. I've been through Renaissance group programs to write my business plan, City College, lots of degrees and certifications under my belt. And the process of getting approved for a $100,000 loan, which is what I asked for, $100,000, 10-year terms, was very frustrating. And it was important, though, that I took a good look at not only my grand vision, but the nitty-gritty everyday operations and the numbers. And, you know, they asked me some really tough questions. And on my own, I did my best to answer those questions and give them what they wanted. And still it was, you know, I wasn't able to cross that finish line, but I wasn't going to take no for an answer. I said, what do you need? What can you give me to help me give you what you want? And so he said, talk to Gabrielle Sapp. She works with Renaissance and SBCD. And so she held my hand through revising my business plan, revising my profit and loss statements, my projections and everything, and got me over the finish line with a $50,000 loan, 5-year terms. So where I'm at right now, it's half the money, half the time to pay it back, twice the pressure to succeed. I've gotten into through my first year. I've built a foundation. I'm learning as I grow. There's an opportunity to expand the footprint within the building, which I'm going for because that's the type of person I am, and it has to happen. And so here I am, ready to take the next step and ready to continue building upon that foundation.
Nice, thank you for that. So Lindsay, I'm gonna come to you. So accessing capital can be scary, right? And a lot of times, you know, you come to these events and it kind of sounds rosy. We really want to dig into some of the challenges that you faced early on that you could share with the audience.
Yes, many, many challenges. For me personally, the first hurdle I had to get over was fear. I think for a lot of us, money is emotional. Your business is definitely emotional, right? It makes you feel a lot of things. And it's like your baby. You want to nurture it, but you don't want to do the wrong thing. I grew up, I didn't know a lot about finance, wasn't taught a lot about things like loans and credit and just money management. So I think my personal habits and my personal fears and shames, honestly, around money really hindered me from wanting to go out and access capital in a real way. So I had to really work on taking the emotion out of it at times, a lot of the time. And I started working with a coach through Renaissance, Gwen Wright, who you may have just heard speak in the other room. Gwen is awesome. She and I have been working together on and off since about 2023. And I just kind of needed some general guidance as to, you know, what am I doing? Where am I going? This is getting bigger. How do I manage it? And we talked about just general numbers stuff, you know, my cash flow, how money was coming in, where was it going, where did I need support? And through those conversations with Gwen, she basically became the tough love that I needed, who said, listen, you can do this. Your business is worthy. You are worthy. Go for it, you know, and don't be afraid. Take the fear away and just know that you're not going to get to where you want to go without confidence and just the feeling worthy, simply. You know, I'm still working on that part, honestly. The fear is like the bar just keeps rising and rising, and there's always something else that's scary. So I'm trying to constantly reframe how I'm thinking about the money that my business is generating, what I'm putting out, and what I need to make it to the next step. So it's a work in progress, but that's been the biggest challenge for sure, the emotional part.
And today you were on stage in front of a bunch of strangers representing your business. You were doing a heck of a job.
Thank you. Thank you so much.
Peter, I'm going to come to you to add on to challenges.
It's really frustrating, you know, when you're at that step and there's like a short timeline you have to follow. You know, you're like closing on a lease, but then you have to pay you know, the security deposit, and you're like, oh well, now I need funds, but you don't want to get the loan too early because 30 days later you start paying it back. It's just like, it's terribly unfair for a small business, and so you're just constantly doing that, and you're really guessing because there's no set schedule, especially in my industry, especially build outs. It's wild, and I feel like it's, you know, there's some skill to it, but it's really like a roll of the dice. if it's good luck or bad luck. And for us, it's been pretty fortunate, but I mean, early on, no one's going to give you a loan. Our second loan we got in 24 hours through a traditional Chase bank term loan for $150K. In 24 hours is in our bank, but it's like you have to have data, because they're just trying to protect themselves. The banks, it's capitalism, unfortunately. And early on, I think like taking advantage of grants, like the city, SBDC, and they're throwing grants out. Like, did you apply for the Excelsior storefront opportunity?
I missed it by
The window.
this much.
Because there's.
They denied me because I had a couple wrong words in my statement. They denied me that because there was a couple things that didn't quite qualify. Yeah.
That's unfortunate. I'm sorry.
Had another loan though, another grant recently though for equipment.
So I think like taking advantage of all your city has to offer should be the first priority, number one, and then reach out to your personal community or people that you've met doing your pop-ups or your restaurant or your jewelry and your clients, and then see like, maybe they got some money and they really want to support what you're doing, and go there. And then last case, and then maybe crowdfunding. We did the SMBX because it's not taking their money. It is taking their money, but they get it back. It's not great returns, but they will get the money they gave you back in, X amount of years. And then deal with the banks. Because it's just a hard process and it's defeating, and if you don't have the numbers, you're not going to get it. Yeah. It's just like, it's not a gray area, it's black or white.
So Tanya, before we move forward on this question, you told me offline that you wanted to make sure people didn't go through the same things that you went through as far as challenges. I know you were self-funded for a long time. Is there anything else you want to share with the group on the challenges topic?
Yeah, I already spoke to the
Okay,
challenges
okay. I was just making
next
sure.
Yeah. I'd say, in hindsight, I would have liked to work with the advisor directly early on to address some of the questions of the lenders that I didn't anticipate.
Okay.
And I don't know, it's just no matter how prepared you think you are, until you're in the weeds,
Yeah, tell me about it. Tell me about it.
I mean, getting the loan process is challenging enough, and then running the business and building the foundation is tough too. So you just have to stay grounded and put one foot in front of the other.
Got it. Thank you for that. Let's talk about some of the assistance, because you guys have mentioned advisors that you've worked with. We want to talk about the types of assistance that you received. But if you've already talked about it more practically, like, what does it even look like to work with an advisor? Like, how do those meetings go? Like, what does that look like when getting assistance? I'll start with Peter and just go down the line.
Well, our first loan, and like going back, we just knew how to make food, so we're not business owners yet. It didn't feel that way. So they helped like set up a business plan. Like for the SMBX bond process, they wanted to see some relevance of if anything's going to work out. And I didn't know how to do that. So they walk you through that. They give you the templates, Excel spreadsheets, and basically phone calls, and that it's just like little steps. We've been open for almost 5 years, and I've been meeting with someone from SBDC, John Delgado, I think that's how you say his last name, for 5 years. Once now, phone calls like once every 2 months, and it's kind of catch up and check-ins, and if I do have some questions, like recently, the SBA loan, he pointed me in the right direction, and it's like, I don't know, someone to like help you that they want you to succeed, and it's not necessarily like a friend or family member or like hyping you up. It's like a professional. You need that.
for sure. Lindsay, you want to add on to that?
Yeah, so I should mention too, in 2020, when I first kind of made the leap, I did take a Renaissance course, the intro to, you know, small business, like the intro course that most of us have probably looked into taking. It was a group course over Zoom, kind of got my lay of the land, so to speak. It was a great program. And then when I found Gwen, through other friends who had leveraged Renaissance programs, we started doing a monthly call, which was awesome. It was a little half therapy session and half financial advising in the beginning. And like I said, Gwen was really good at tough love. She's very smart. She's very clear. And for someone like me who's got 1,000 tabs open in my mind at any time, she kind of helped me drill down, focus on specifics. We looked at my numbers, you know, every single time we met. I'm sending her my profit and loss statement, my cash flow statement. We're talking about goals. We're talking about, you know, what is it going to take to do X, Y, Z. So it was a monthly call for the first couple years. We've kind of moved to quarterly. Life's been quite busy for us both, but I saw her outside and reminded me that I need to schedule time on her calendar. So yeah, I mean, working with Gwen's been great. Once we kind of decided that I was going to go out for the loan through Main Street launch, she really kind of held my hand through the process. I obviously had to do all the homework and organizing, you know, all my paperwork, getting all my reports in line, understanding the reports. We made projections together. You know, I'd kind of do it on my end and send it to her for some feedback, and we really worked kind of in tandem to get everything together and get it done. And that was huge. Like, I can't imagine having done it just on my own blindly. I probably wouldn't have been approved, because I found, even with her help, that after submitting document after document, report after report, and you know, there's just so much paperwork. There's so much that you need to kind of present. You know, if I hadn't had her support, I would have probably just said, never mind, this is too much. And honestly, I wish I did it earlier. I wish we had got to that stage a little bit earlier than we did, but I'm glad, you know, better late than never, and I'll probably be there again, and I'll probably call on her again to review my materials now that even though I have a better understanding of what's required and kind of, you know, more practice with the whole process. But yeah, I hope that Gwen and I are connected for many years to come.
Awesome. So you want to add on to that for support and guidance?
Yes, my advisor has become a very important person in my life. I cannot say how much I appreciate her guidance and her support and her patience. I wish I had her earlier on. There's things that I would have done differently from the beginning. Like my entity, I was a sole proprietor. I went LLC because that's what everyone says you're supposed to do. Then she taught me that was going to not be so beneficial for my taxes. So she had me file as an S Corp. She helped me revise my business plan, not only to satisfy the lenders, but to what would be practical for my success, truly, from her experience. She also has connected me to a bookkeeper that has helped me, and also a client of hers. One person that is my first employee was a client of hers, so she's been good for networking as well. And she helps me stay on track with all of the paperwork and taxes. I told her, this is a little overwhelming for me. I'm not sure what I'm supposed to file when, and what payments are due as far as all the taxes, and what you file every year, what you file every other year, and what month, and everything. So she helped write me a list. Yes.
That's amazing.
Yeah.
So what I heard a couple times was, I wish I had gotten to an advisor sooner, right? So those of you that are thinking and haven't gotten into the process of accessing capital yet, we highly encourage you to get to an advisor now. Shameless plug, not so shameless. Cal OSBA are proud funders of funding partners of Renaissance and the SBDC so that they can provide free one-on-one counseling to business owners. So we take taxpayer dollars and help fund those organizations so they can provide those services to you for free. And so we highly recommend that you take advantage of them. So I think we still have some lenders around. So as small business owners, now we get to be advocates for everybody else in the room, right? What are some things that you wish lenders understood about small business owners like yourselves? You want to start?
Okay. All right, I'll just read from my script.
Let's go.
All right. What lenders need to realize is that an entrepreneur who is passionate about our vision requires adequate support to launch the project, sustain our lives, and scale our visions into a thriving community reality. My journey has shown me how critical it is for small businesses to secure adequate initial capital, funding that covers the early build-out and growth phases, not just bare minimal operational costs. I'm incredibly grateful for the foundational support of Renaissance's group workshops, which helped me write my original business plan. However, experiencing the delays of traditional approval process cost me valuable time, depleted my resources, and caused a great deal of stress. So if institutions could build automatic pathways to local business advisors early in the application process, rather than relying on red stamps, automated rejections with little explanation, it would be a game changer. Having access to one-on-one advising early on would have greatly expedited my timeline and reduced the stress in my life. By bridging the gap between lenders and local advisors, we can better set up dedicated entrepreneurs for long-term success from day one.
Awesome. Thank you for that. Lindsay?
I would kind of echo Tanya and just say that, you know, we don't all know what we're doing from the get. Like, we need help. And I'm grateful that I kind of found a place to turn early on, early-ish. I wish I had done it even earlier. But, you know, I had no experience pitching to anybody, except maybe like my husband or like my best friend. And so there's like a pitch aspect to it, right? It's like you got to have your numbers and your paperwork, but also just how to talk about your business, how to make yourself sound good and how to make yourself sound credible. And so, you know, I guess I wish more lenders knew that we don't all have it all together. We need help to get there. And if we had help, we could get there faster. I'm sure they could, you know, get those loans funded faster too, which I'm sure they would like. You know, my credit score wasn't where I wanted it to be when I first went out to do this. My cash flow wasn't where I wanted it to be. You know, I had projections, I had plans. You know you can get there when it's your business. You have the ambition, the drive. You need the capital. And sometimes it's like you're asking for the capital. You needed it yesterday. So that's another thing I would say is just like, give us some grace. Understand that we're, you know, in most cases when we go out for this kind of money, we might be struggling a bit. We might be stuck in between a rock and a hard place. And so I think it's guidance from advisors. It's, you know, lenders being patient and kind of laying out the process clearly. And, you know, I feel like my loan officer was really on it, you know, very firm, very about his business, as he should be. But me on the other end, you know, if I didn't have Gwen, if I didn't have, you know, this kind of background information, I would have probably just been intimidated and slowly backed away. So I guess just like a mutual understanding of like what we're going through, the place where we are, where you hit that moment where you're like, I can't keep going unless I get some help and help to grow. Not everyone's in a place where they're just ready to go, I guess is kind of what I wish people would know.
Good info. Peter, bring us on. What do the lenders need to know?
My last loan process for the SBA was the worst one yet, and I've probably done 8 loans in 5 years, paid off 6 of them. I'm pretty seasoned now, and I I feel like, you know, you talk to your account manager and then it goes to the copywriter account manager, then I get boosted like another person, you know, they got to know your story, what's the money for, it's just like this back and forth process that you could streamline better. It's really frustrating, takes a lot of time. Another problem, I don't know if this is just my experience, but you know, with QuickBooks, you have a accrual-based, you know, owner's draw, and when you look at it, year 5, it looks like you have this crazy salary. And every step of the way, we got denied the first time because they're like, well, you pay yourself so much, and I have to explain them, that's 5 years. That's how it works. You know, I'm explaining to the bank people, I'm just the cook, how it works, and every person is like, yeah, but I just don't understand because it says this number. It's like, why? How are you? You're the money person. And so we got denied, and it took 6 months to get this loan where I finally like got someone who was like, oh yeah, that makes sense. I see that now, month by month. But that doesn't feel good that I'm asking the money person who should know numbers. It's just frustrating. It's like the funny world we live in.
Gotcha. Another shameless plug, not so shameless. We are proud that in the Scale Network, we have working solutions in Main Street Launch that also provide technical assistance as well as being a mission-based lender. And so when you're looking for a lender that is also cognizant of what it takes to be a small business owner, that's a good place to start. TT is here as well, so that's a good place to start. So now we're looking for, you guys thank you so much for giving us all of this information. I want you to leave them with, make some noise for them. And if we have time for a couple questions, we'll try to take some, but I want you to leave the folks with 1 or 2 practical things that can help them in preparing to approach a lender. Tony, I'll start with you.
Well, don't wait until you really need money to ask for it.
Talk about it.
Right. I started my first loan process with a little bit of a piggy bank, which I think was helpful. Now, after investing all this, you know, money, blood, sweat, and tears into my business, I might be groveling a little bit more. Stay grounded in your purpose. Why are you doing this? Sometimes on the hard days, I have to ask myself, why was this my dream? Wouldn't it just be easier to go work for somebody else? But I do have a purpose that's bigger than me, that I want to fuel life and prosperity into my community, which I'm very passionate about. It's a community that I've lived in for a long time. It's a working class, middle class kind of neighborhood, so there's not a whole lot of, you know, high-end, you know, spas that I'm competing with, and you know, I'm making good connections with my neighboring businesses and making my presence known in the neighborhood, and there's a lot of people that are really grateful that I'm here. I really, you know, yesterday there was a woman who, her nail salon lady called in sick, and she came into my shop all upset, and she turned out to be an owner of a hair salon, and we had this conversation, and by the end she was like, thank you so much for changing my mood. So I really, you know, make a difference in people's lives, and that's so fulfilling at the end of the day. So stay grounded in your purpose. In Sanskrit, we call that your sacred intention, your sankalpa. When you're going through the lending process, when you're going through, you know, the hard times with your numbers and your financials, try to separate your emotions from the numbers, separate your emotions from what you're required to submit and resubmit. You know, just look at it as an opportunity for learning and growing, because, you know, when you're like, why are they making me do this? When you're in the weeds and you're facing those issues, you're like, oh, yeah, they asked me about this.
Right.
Yeah. So that's what I got for you there. Yeah,
Awesome.
Thank you.
For that. Lindsay, one or two things, practical.
Well, I definitely echo what Tanya said about emotion. Don't be afraid. Remove the fear. Fight the fear. Also, I would say don't sell yourself short. I was a little too conservative, I think, when I went out for my first loan amount. I wish I had asked for more. I hope I would have received more. But don't be afraid to ask for what you need. That is in relation to the actual amount that you're asking for and the help that you might need to get through the loan process. And then the last thing I'll say is just get to know your numbers really, really well. Get to know your reports really, really well. Get organized, have a folder for everything. Look at it every single month, every week, as much as you can, so that when the time comes for you to pull all the data, you feel like you know it well enough to really present it in the most effective way.
That's great information. Peter, bring us home. Practical information.
Ask for help. It's, you know, we say all these organizations that lend a hand, but it's amazing when you do speak up how many people will come forward, or just strangers that are like, I know someone, or I could help you do this. And just keep asking, because it feels good to help people. And then once you're in the position, you give back, and just full circle, and then we could uplift each other and try to all do what we want to do. This is a side note, but if you do third-party like loans through like QuickBook, DoorDash, Square, just be really careful. That almost like crippled us, because I didn't think about 20% of sales being taken out for, you know, X period to pay it off. You know, it seems good to get 180K in 24 hours, but oh boy, so be careful.
That's great information. One quick thing, Instagram is lying to us. So these gurus on there that say just go get you an EIN and you can run right into a bank and get $10,000, it doesn't matter your credit score, your financials, they are lying. And you've heard that all day today. Make some noise for our panelists. Thank you guys so much for your attention.
So did you all find that really super helpful? Yes. They were very vulnerable in sharing with each of you their inside stories, and that was really the crux of having them as panelists, because oftentimes you might hear the lenders speak from their perspective, but you really do need to hear from the persons and the businesses that actually participated in the loan process. And you need to really understand from a human perspective just the requirements that, you know, it pulls on you emotionally, spiritually, mentally, and physically. That part we don't get a chance to talk about. So I encourage you as we move into our next session that to make sure that you network with the business owners. Not only just network, look at ways that you can participate and purchase goods and services from their business. So a round of applause as they exit the stage. All right, good deal. So we are about to wrap up everything, wrap up the program, everyone. So before we do, I just want to make sure that you all just gleam on the insights that you have connected with today. Take some time, have reflection. If you've come with someone, spend some time talking to that person. They may have captured some moments of reflection that you didn't see because you were capturing something else. Make sure that you take some time and reflect on what are your business goals. As you heard on one of the panelists say, don't wait until you need money to go get money. So think about what are your business goals. Think about technical assistance, support. What do you need to help you to take your business to the next level? Do you need to work with a consultant at Renaissance or the SBDC? Talking to a lender so that you can understand, exactly your specific need based on the conversation you have with the lender. Also network with these lenders. Don't wait until the last minute and then run in when you need money and say, oh, remember me, I was at the Renaissance, or I heard you speak. They don't know you from whomever. So it's going to be really important for you to establish the connections and the relationships today. So don't let that pass. But now as we close everything out, you'll be moving to the final segment, which is Meet the Lenders Hour. That's going to be taking place in the Latin X room. That is where you had your lunch. So make sure you go by, have the opportunity to network directly with lenders, ask questions, and have those meaningful conversations about financing your business. You'll also have the chance to connect with partner organizations, visit the tabling areas to gather resources, contact info, and learn more about the support services available. We also encourage you to stop by the Renaissance Center table as well so that you can learn about what are some of the upcoming programs and events that they have that you may want to continue to participate in so that you can still position your business to be on the right pathway to get capital and to grow. On behalf of both organizations, we want to thank you all again for being here today, and we hope you leave with new connections, meaningful insights, and next steps to move your business forward. Give yourselves a round of applause for being here all day. Thank you again to Renaissance, to the SBDC, and to the San Francisco Main Library. Let's network. Thank you all.